Hello, chart watchers, and welcome to this Friday, December 7th live show. Decision Point, we're here. Erin Swinlin. I am very happy to be doing my second show here for Decision Point and looking forward to doing many, many more. What we're going to do today is I'm going to look at daily, weekly. I'm going to skip the monthly. We did look at those last time because I have a little extra something I want to show you. DP scoreboards, of course. We're going to look at the large caps, mid and small caps. I use the ETFs for that, IJH and IWM. We'll look at the big four, dollar, gold, oil, and bonds. And then also I'm going to go through the decision point indicators so you can get an idea of what's going on in the short term with the Swinlin trading oscillators. And then we'll look at the intermediate term indicators, the ITBM and the ITVM. And of course, if you want to know more about these indicators and how they're calculated, you can certainly go into Chart School on the website and you can look those up, and also I do put them at the bottom, and Carl does as well, at the bottom of every article, so you can just go to the bottom and click on those links and they'll take you right into Chart School. And then if we have a little bit of time, I'm going to do Dow predictions. And I don't like to do predictions. Admittedly, I really hate doing predictions. But every year, Timer Digest, who tracks the decision point timing signals, asks those who are in it, and usually who have hit the top 10 at one point or another. For those of you who don't know, we were Market Timers of the Year with a couple of other people. So Timer Digest, though, they ask us to give them predictions as far as what we think is going to happen with the Dow the following year. So I'm going to end up giving you what I turned into them. Again, don't like to do predictions. Don't hold me to them. But if I recall, last year's I did pretty good. But I honestly, looking at what I've put in this time, I kind of hope I'm wrong. That's a little bit of a clue. All right, so let's look at the decision point scoreboards. And you'll notice that we do have these short-term sell signals. Now, typically, if you notice on the trend models, typically when we get short-term signals, they're neutrals, just like this one. The only reason it isn't a neutral is because where the crossover occurred, the 5 and 20-day EMAs, when they crossed, they were below the 50-day EMA. And when they're below, that gives you a sell signal. And similarly, if you're in the intermediate term, if you have a 20-50-day EMA crossover and it is below the 200-day EMA, it's a sell. But if it's above the 200-day EMA, it's a neutral. I'll show it to you on the chart. It'll probably be a little easier to understand it that way. But what I do want to point out is we did get 3 new signals today, and we actually got a short-term trend model sell signal on the Dow yesterday. You can see that all of these buy signals that we'd had continue to deteriorate. We're seeing more and more sell signals. The ones that really concern me are, actually, I didn't even mark this, long-term trend model on the NASDAQ 100 triggered a sell signal today, and I didn't put that in. It never happens. It hardly ever happens, I should say. So we ended up with a long-term trend model sell signal. You'll want to see that. We don't get those often. All right, so let's go ahead. I'm going to skip us into the charts so that you can see those. See, don't want that one. I gotta find my arrow here. There we go. All right, so what I'm going to do is I'm going to take you to the Decision Point live chart list. And you can get to it, I'm going to get to it through my chart list, but you can get to it by going to the blog articles. And if you go to the Decision Point blog right here, boom, there's that live chart list. And I'm going to go over that right now. And it's got all the annotations. Everything that I'm showing you right now is in there. So you can copy it if you want to use our indicators, all of that. That's where you can get to it. So, but let's go look at some charts. All right, I am going to start with going to that chart list. And we're going to start right up front with the Dow. And I'll look at, like I said, I'm not going to look at the monthly charts because I want to have a little time to talk about those Dow predictions at the end. So we'll just look at the weekly charts. So let's start. at this point, the main thing that I notice, well, of course, you're going to see on all of the large cap and really a lot of the mid and small caps, we have had these double bottoms that I talked about last week that we were hopeful would actually become patterns. And they would become patterns if we had gotten the breakout above the middle part of the W, the double bottom. But we didn't, and it failed before it even got up there. And now we're getting ready to come back down and test the level of that October low that also matches up pretty much with that June low. And, you know, so at this point, this is pretty important support that we need to hold. But looking at this particular chart, I have to tell you, there's a couple of big problems here. The new PMO sell signal on the Dow, the bearish confirmation of price tops and PMO tops, as well as OBV tops. All of those things are telling me that we should expect more downside, unfortunately. Like I said, I wish I had better news, guys. All right, Dow's weekly chart, how is that one looking? What you'll notice on most of the large caps is price is holding rising bottoms trend lines that are drawn from 2016 lows. I think they're mostly drawn from those 2016 lows. And at this point, it's holding that. But as you can see, we did close just below it this week. However, we did it 2 weeks ago as well, and we still managed to get back up. So we're really right there. I think I would call this a breakdown, but it's not a decisive one. It's one that's just telling, I think it's sort of an attention flag at this point. We've got the PMO sell signal that's been in play since October. So things are still not looking very good on the Dow chart. All right, let's look at the NASDAQ. We're going to go to the daily chart here. And again, double bottom failure. Went up to go to that confirmation line, failed, didn't even get there, and has fallen back down. It's just about ready to test the support at this October low. But I would be looking for a test further down to the low here at around 6,400. And that pretty much matches up right here with the low back in April. But I think ultimately what we need to be looking for is 6,200 for the NASDAQ. I think we're going to be falling even further. If we break down, of course, I would definitely expect it. But here's the big problem. This is the one I meant to put on our scoreboards, but I promised to do that as soon as I'm done. The 50 just crossed below the 200-day EMA. These are EMAs. I know lots of times we talk about death crosses. I didn't watch CNBC today, but apparently they talked about it a lot. They're important. They are a problem. That's not something you want to see. We haven't seen one in a very long time. So I suppose you could call it a death cross because I do think it's portending lower prices in the future. And here's one of the reasons why. Let's look at the weekly chart. Now, remember I had told you we had all those rising bottoms lines drawn from 2016 lows. The NASDAQ has failed to hold that. It failed to hold it a long time ago. Right now, what's holding it up and what we're watching is that 6,500 level. You've got the PMO sell signal. The PMO is not at all interested in slowing down. In fact, you can see it had started to slow down and now it's accelerating again. So we've got the sell signal. We haven't reached negative territory. That's really what it seemed to need to do before we could pull out and start the rally again. I'm expecting, again, to see more downside. I don't think that 6,500 level is going to hold. OEX, S&P 100. Okay. Again, failed double bottom, failure to even reach the confirmation line. PMO is declining. This is a second top below the zero line. Tops below the zero line are always, I think, especially bearish, but now we have a second one. I think the only thing you could look at to maybe think that it's not so bad are these, the tops here. The price tops are moving down and the momentum tops are moving up. I don't give it too much. I'm not giving it too much weight at this point. Right now, we're at that 1160 level. That's the one you want to hold. I don't think we're going to do that. I suspect we're going to go down and test that 1140 back here from these April, May lows. But I think ultimately, we're looking at 1120. I don't think that it necessarily is going to happen next week, but I'd be watching over the next month. All righty. There you go. Rising bottoms trend line here, holding on the OEX. As far as the weekly chart, you can see we did close below it this week, which isn't, again, I think is an attention flag. We're still not decisively, we haven't had a decisive breakdown below that trend line. Decisive is 3%. We look at a 3% move as a decisive move or breakdown. So we haven't seen that yet. So I think there's still opportunity to pull out. But again, sell signal and the PMO on the weekly chart. S&P, really the same picture, isn't it? We have the double bottom that's failed. At this point, we took out the last lows here, the last short-term lows from a little bit later in November. And I suspect we're getting ready to come down here and test those October lows. But ultimately, I would be watching the 2550, 2500 level. Again, second top below the signal line. OBV is heading straight down. Look at all of the heavy selling we're seeing here. Look at the volume, all of the red bars versus the black, of course, the up days. It's a lot of selling volume, but I think there's more to go. All right, S&P's weekly chart. Again, sell signal looks very similar to the others, and it is holding rising bottoms. At this point, like I said, 2600, that's where we would like to hold. I suspect we're going to go down to the 2500 level before it's all said and done. And ultimately, I do think we are looking at a bear market situation here and certainly could go much lower. I've been selling into strength. I recommend you do the same. I have just a few long-term holdings I have right now, but if we get a decent rally, I'll probably let go of those and hold on and wait for some opportunity to come back in. But I'd rather not. I don't think I'd enjoy the ride all the way down that I'm thinking we're going to have. So just that heads up. I mean, that's just people always ask me, well, what are you doing? All right. Now we're looking at the mid caps, and as you can see, we've got we took out that short-term low. We're testing the low back here from October. Of course, if we had a double bottom, it's clearly failed. We didn't get above the confirmation line, and right now we're very, very close to a sell signal on the PMO. I think the only thing that I would look at as maybe a positive here when I'm looking at the mid caps are in the thumbnail. You can see these price lows. And the price lows are in a negative divergence. It's a positive divergence because we have price lows moving lower, but you can see the PMO has been rising overall. So that would be considered a positive divergence. So maybe we will see a little bit of a bounce here for the mid caps. Weekly chart. Similar, we got the sell signals. These negative readings I don't like, but they're necessary if we want to get to a point where we can get back into a bull market situation. We just have a bit longer to go. All right, Russell 2000. And again, failed double bottom. And look at what happened to the Russell 2000. We lost support at the October low. Where is our next area? I'm looking back here at the February low. I would expect to see that tested. When I look at a PMO that's ugly, again, like all of them, with two tops below the signal line. Like I said, I think the only positive you may want to draw out of it is these, the declining tops, rising tops on the PMO might be considered, somewhat of a positive divergence there, but I'm not buying it, guys. All right, weekly chart. Here we go. All right, again, PMO sell signal. Look what happened to the Russell 2000, however. We lost both of these rising trend lines, and I had given it the benefit of the doubt by moving it out from here and taking on those lows back that we saw earlier in the quarter. But no, it doesn't matter. Both were taken out, and now we're looking at this 142, 140 level as really important support, because I think if we lose that, we could be looking at, coming down and testing support at the 2015 top. So that, this could be a little bit more painful. I hate to sit on here and talk about how the charts are so bearish, but of course we all need to know that when they are. All right, I'm going to make this a little bigger. These are actually my very, very short-term indicators, and I don't typically show them unless there's something interesting. And today I thought there was something interesting of what we've been seeing the last couple of days. I look for spikes or climactic readings here, and those are usually they give me the information I need when I'm looking for reversals. So for example, we had some very high negative readings alongside a puncture of the lower Bollinger Band on the VIX. And that to me is a selling exhaustion. And sure enough, I mean, in the very short term, it turned out to be. So these don't give you typically you're not going to get an indication as to what's going to happen over the next couple of weeks from this chart. It's ultra short term, very short term. So this is almost more of a day trader indicator, except I think when the VIX, when it starts puncturing these Bollinger Bands, that's when I start looking for something. So right now we have climactic readings to the negative, and we're getting the puncture of that lower Bollinger Band. So to me, I do think we are looking at a possible selling exhaustion right now. And that would mean that we hopefully could look forward to a little bit of a rally pop at the beginning of next week. That's what I'm hoping for based on this chart. Short-term indicators, and I consider this, weeks, usually in the weeks time frame. We got really overbought, and eventually, of course, things, the bottom fell out. Currently, we're sitting in neutral territory, and there is room for these to move even lower. So they can accommodate more downside. And like I said, I'm expecting more downside. When I look at this, again, 2550, that seems like the next level if we fail at 2600. Intermediate term indicators. All right, these have been looking very positive, but unfortunately, these are starting to turn the other way as well. The only good thing I can say here, sorry about that, is if you look in the thumbnail, we do have tops and they are moving lower, but we haven't gotten the negative crossover yet. So, I mean, there's still a little bit of hope. You can see back here, it was a false break below that signal line. Hopefully that's what we're going to see this time, but something to keep an eye on. This is still, I would say, soft for the intermediate term. It does make me concerned about the intermediate term, especially if we end up getting the negative crossover. So right now they're trending higher overall, but again, I see them starting at the top, and there could be some problems now. All right, let's move on to dollar, gold, oil, and bonds. All right, here we go with the dollar. Okay. All right, here we are. I just want to shorten that for a minute. Okay, so the problem right now going on for the dollar is the breakdown out of this rising trend channel. I don't like it. The only thing that I think there's some positive, we could end up holding, that top back here in August, but I don't like to see this starting to roll over. And in fact, you could even make a case for a double top here that's starting to set up, in which case this would be the confirmation line, basically that support level. And if we lose it, then we should expect a move to the downside on the dollar the size of the pattern. This is still really early to start calling a pattern, but I just wanted to bring it to your attention. We'll look at it again on Friday of next week. And let's go to the weekly chart. And then, like I said, I want to give you plenty of time to digest what I'm thinking about with the Dow. Okay, the weekly chart for UUP still looks pretty good. The PMO is still rising. It did tick downward this week. but it is still holding that 25.75 level here for UUP, and you can see that was the top back in 2010. When I see it hold that, we do want to see it hold that level. I don't like the look of the daily chart. Like I said, maybe a double top. We could look at prices moving below, further below this area of possible support. We'll be watching that closely. Right now, it's still holding it. All right, gold. So I guess overall, you could say with the dollar, I'm kind of neutral at this point. I see the breakdown. I'm looking for a breakdown on the dollar. It could, but it's not really set itself up just yet. All right, gold. Gold is finally starting to do what I have been expecting it to do for so long. We're finally getting a rise out of it. When we have the markets doing what they're doing now, typically we are going to see a resurgence in gold. And we've had really a great setup with very bearish sentiment here on the gold trust premiums and discounts. But we got that, it pulled way back today after being very high previously. So there's a lot more interest in gold now. That's what that's telling me. And we did that breakout above 1240. That's what I've been waiting for. We finally got it. The bearish confirmation that was in place, you can see, is being broken through by the PMO. And now we've got the scooter back in the hot zone. So all of that looks good for gold. And a lot of people ask me, well, if you're bullish on gold, you must be bearish on the dollar and vice versa. And, typically that is the case, but I didn't show that to you. Right now, gold and the dollar are decoupling. They don't have a reverse divergence right now. They actually, if you look at the 50-day average of their correlation, is still positive. So they can certainly travel in the same direction. So I can be bullish on both of them. But right now, I'm feeling more neutral as far as the dollar with that breakdown out of that rising trend channel. You look at the weekly chart for gold, everything's looking good, holding on to that rising bottoms trend line. You got the breakout from declining tops. Now we've got the buy signal. You can see the increase that we had in the discount rate. So that was a nice, gave us some opportunity to look for a rally in gold. And like I said, we're finally getting it. So I'm bullish gold. And especially if the market continues to be weak and or soft. All right. For oil, we might finally have found the bottom as far as oil. It really seems like, at least with the USO, that 1050 level is holding. And obviously, and then we've broken above the 11. Look at the PMO. It's in very overbought or oversold territory. And now we're getting ready to have a PMO buy signal. So I think there's some possibility here for USO, but it really needs to break out above that 1150 area that lines up back here with that February low. So that's what I'd be looking for as far as oil is concerned. Let's look at the weekly chart, though, so we can really get a feel for the support levels here. All right. Well, again, PMO sell signal. Obviously, we've been looking at some bad things going on with oil. And right now, we do have the weekly. The 17-week is crossed below that 43-week. That gives you another signal that things are not good right now. But that $11, I think we were talking about, right, back here, we do want it to hold that $10 level right back here. It doesn't line up, but it's what I would call a psychological level. People remember where they bought and sold their stocks psychologically, and a lot of times it stops at those, the even numbers like $10 or $11. People remember, oh well, so they $10 is sort of their stop, right? And it'll go below that a lot of times. So what I'm looking for are the lows back here from 2016. All right, let's figure out bonds, and then I'm going to get into talking briefly about the Dow. All right, so bonds, I've been bearish on bonds for so long, and they finally broke out and that's because I'm sure I've been so bearish on bonds. We did get the PMO buy signal in early November to give us give us a flag that things might be turning up for bonds. And sure enough, we did get the PMO back up into positive territory. We got the breakout above 116 and holding that level at 117, where you can see we have a lot of support. Resistance previously back here. So all of those things I think look good for bonds. The problem I've been having with bonds are the longer term charts. And today, honestly, with that break, that giant break above the neckline again, we had it fall below it, and now we're getting it back up. If I see it break above this declining tops trend line from the head down to the right shoulder, I think the pattern will be busted, but I'm going to hold on to that pattern, and the only reason why is because I think it still looks really, when you look at the 30-year Treasury bond monthly chart, it has a head and shoulders, and it's even with that that rally, it doesn't even bring it back above that neckline. And as you can see, lowest readings we've seen since the 80s as far as the PMO. So I don't think bonds are like doing that. I think a lot of that is the market and what's going on with it right now. All right, so I'm going to go ahead and summarize very quickly what I just showed you as far as large caps. So remember, double bottom formations are busting. We have all these short-term PMO signals coming, and all the weekly charts currently, as far as large caps, are holding those rising trend lines. Mid caps, that short-term support has been broken on the daily chart, and now they're starting to head toward the February lows, the mid caps. Small caps, really the same identical thing. All right, and as far as my indicators go, oh, here we go. I still have those. Whoop, that's the wrong chart. Okay, that was what I was going to talk about. All right, well, let's just go back to that. I don't want to get it all confused. And we have 3 minutes. All right. So I have to turn in, like I said, I have to answer questions about the Dow, and I'm going to pull up actually the weekly chart because that's where I'm going to do it. So the first question that they asked me, in your opinion, is it going to be a bull or bear market in 2019? And I said bear. I think we're going to have a bear market in 2019. I think we've already started it. What is your target forecast for the first quarter for the Dow in 2019? And I said, after the 3 months, I think we're going to be down to 22,000. I think we're going to be seeing lows all the way down here. And then I said, what is your forecast mid-year? And I actually called it down here at these lows back from 2015 and 16. I mean, if we're going to have a bear market, I mean, I'm looking for, we need to work out the technicals here. And then it says, what at the end of the year, what are you thinking? And I'm thinking by the end of the year, we should be able to, if we get down to that level, we should be going into December, usually a favorable time of the seasonality. So I'm expecting it to come back up. I said year end at 19,000. I think that's actually a little optimistic, but that's what I went with. And then finally, they asked, you know, what are the key factors that will influence the market in 2019? And, you know, I had to think about this a lot because there's a lot of different, you know, moving parts. And what I ended up going with is the technicals primarily. We have just been in a bull market. We need to work out those technicals. We need to get prices back down. You know, we've had corrections, but honestly, it's time for a bear market situation. And then I also said, so I said technicals, and then I said global markets. And I said that mainly because I'm still wondering what the trade wars are going to do to the market next year. And I don't know that it'll be good, especially if it's still going to be dragging out like it is right now. So those were my thoughts on what the Dow is going to be next year. I would love to hear your thoughts. You're certainly welcome to send me an email. You'll find it at the bottom of my blogs, erinh@stockcharts.com. Would love to hear from you. All right, well, that pretty much completes the Decision Point report for the week. So I want to thank everybody for joining us, and do tune in next Friday for the Decision Point report at 5 p.m. Eastern. It's just a half hour, it gives you a quick wrap up. And of course, I'm on Market Watchers Live in the mornings, so you'll want to go ahead and stay tuned to that on Monday morning at 9 a.m. Pacific and 12 p.m. Eastern. Have a great day.